Welcome in, folks, and thank you very much for attending the August 25th live investment webinar. My name is Dean Gallagher. I'm an investment consultant and founder with Portfolio Builder, here to walk you through how to build out the portfolio today and answer any and all questions you all have as to why we're positioned, okay, and how we're going to absolutely smash the market into the end of the year with our performance, but we're going to do it super safe, okay, and want to welcome a couple people in. So welcome in Adrian Jimenez, welcome in Cecilia, welcome in Eric Stone, welcome in Guibo, welcome in Hazel, welcome in James Robertson, Rocky Mojabi, welcome in Sam, welcome in Sylvia, welcome in Sir Victor Agu. Thank you very much for joining us here today. Stephen and Virgil, our newest pro and bootcamp member, welcome into the live investment webinar. So thank you so much for your time and attention to join us here today, folks. And once again, my name is Dean Gallagher. I will be kind of walking you guys through how our portfolios are structured today, so you can get capital behind it, start making some money in your trial, and be positioned for a massive melt up into the end of the year here. Okay. So at any point, folks, if you have any questions, you can do one of two things to ask questions here with me live, okay? And if you're on the recorded version, feel free to just reach out to me, with a text or with a call at 505-322-7515. But if you are in here live, folks, feel free to scroll down to the bottom area of your Zoom platform here. Okay, when you do that, a gray bar is going to pop up. When that gray bar pops up, you're going to have two icons that you can use to ask questions. One's going to look like a chat icon. It's going to kind of be in this area. Okay, if you tap on that, you can type into the chat box. And then when I have a second, I'll read your question and we'll address it. Okay, or what you can do too, guys, is you can actually unmute your microphone here in the bottom left-hand corner and ask any questions you have just in live interaction. And it's so fun to get those live questions too. Okay. Oh, and Ryan wants you guys to go ahead and raise your hand to speak live, or just type into the chat box, and then we'll get it answered. Okay. So very cool, guys. Thank you so much for your time and attention. With no further ado, we will go ahead and get started up. Okay. So welcome to the investment webinar presented by portfoliobuilder.io. My name is Dean Gallagher. I'm the dedicated resource for all investors on your one-time free trial. Okay, so if you haven't yet, folks, make sure to save my number and call me or text me with any questions you may have. Okay, my number is 505-322-7515. Okay, and make sure, folks, to save that. And if you want, you can text me and just say, "Hey, Dean, this is Steven. I'm in the webinar." "Hey, Dean, it's Adrian." "Hey, Dean, it's Cecilia." "Hey, Dean, it's Eric." "Hey, Dean, it's Guibo." "Hey, Dean, it's Hazel," or James, or Sam, or Sylvia, or Sir Victor Agu, or Virgil, and then that way you guys, I'll know who you guys are, and that will help it make it easier, a little bit easier for me to communicate with you guys and understand who you are. So if you guys want to go ahead and just shoot me a quick text, let me know you're in the webinar. That'd be greatly appreciated, and also make sure to just save my number. Okay, we love to talk markets and show people why we use strict risk management in our design and approach to the markets. Okay. Okay, so we love to sleep like babies at night, knowing we're using risk management to protect our hard-earned nest eggs. Proper risk management provides consistency, reduces stress, okay? And one of the beautiful things that I love about risk management, folks, honestly, is the reduction of stress that you have while you invest, and also the added level of safety that you have putting your money at risk in the markets. Okay. We like to take as much risk off of the table as possible. Okay. At all points. So you're going to learn a little bit about how we do that. And as you see, how we go through and we gyrate, how we make money in down markets, just like we did in Q1 when literally everyone on the planet lost money. That's going to show you how we always think about our rules in risk management, and really, employ Warren Buffett's number 1 and number 2 rules. Does anyone in the crowd know Warren Buffett's number 1 and number 2 rules when it comes to investing? I'm going to ask that here live, and let's see if I know Sylvia's seen a couple of the webinars here where we talk about Warren Buffett's number 1 and number 2 rules when it comes to investing. I want to see if anyone else knows those rules at this point. Okay. And just type into the chat box if you do know his number 1 and his number 2 rules when it does come to investing. Okay. Really simple, but I got to tell you, I have these rules now framed in my office, and we actually, I think about half of our staff members have that framed and on their desk as well. So pretty cool, and I'd encourage you to do the same. Okay, so it looks like no one in here knows that. So what I'm going to do, folks, is I'm going to show you those rules really quick. Okay, so let's go ahead and take a look at what those rules are. Okay. All right. So if you don't know these incredibly important rules laid out by Buffett, here they are. Okay. Rule number 1, never lose money. Rule number 2, don't forget rule number 1. Really simple, guys. But yeah, there you go, Virgil. Yep. There we go. Nice, Virgil. Very nice. And it looks like Sylvia was just trying to type some in too. So nice, guys. I think you guys, Virgil had the general concept, and Sylvia looked like she was trying to type it in. But yep, rule number 1, never lose money. Rule number 2, don't forget rule number 1. Okay. And that came from the Oracle himself, right? All right, guys. So we love to sleep like babies at night, knowing we're using risk management to protect our hard-earned nest eggs. Proper risk management provides consistency and reduces stress. Okay. It's also the core focus of what we do. Okay. Now, Ryan, mute up the 2 people that are unmuted currently. Thank you, sir. Okay, so let's take a look at the best performing ETFs you can own today. We own the S&P 500. With a free leverage ratio of 3-to-1, okay, without paying for margins or loans. Okay, guys, you can see that this is my TD account right here. Okay, if I want to use margin or a loan here for this account, I'm going to pay 7.2% to use to use margin. Okay, but because I'm using an ETF to get my free leverage ratio of 3-to-1, I have 0 margin or loan interest rate that I have to pay for. Okay. And think about that, 7.2% with TD Ameritrade, right? So if you have $100,000, they're going to charge you 7,200 on that margin number. Okay. Or I can own a leveraged ETF with a leverage ratio of 3-to-1 without paying for any margin or loan. Okay. I would much rather do the latter. Okay. So now with that being said, though, we take this ownership. Okay. We do use some leverage because the Fed is more supportive of financial markets than they have ever been in human history in the United States, period. Okay. So we understand what that did in 2009. And if you don't understand what happened in 2009, well, go look at a chart from 2009 to 2011 and you tell me. Okay. The markets skyrocket, guys, when the Fed's this supportive of the markets. Okay. Quantitative easing, it's a wonderful thing, but that's telling us to be long the market and actually to use some leverage here to be long that market so we can outperform what the market does. Okay. But we're going to always take that and then add a layer of security by using risk management. Okay. Now let's take a look under the hood of UPRO. This is the specific leverage asset that we are using as our core holding today in both the buy and hold portfolio that can be used with less than 50K and also the pro portfolio that really most investors are using that with kind of anywhere from over 50, but really kind of into the hundreds of thousands and into the millions of dollars following our program. Okay, so let's take a look under UPRO today to see why it outperforms the market in a huge way. Okay, so this is its core asset classes. So really, it's going to be the S&P 500, okay, and a bunch of swaps. Basically, guys, this is how the banks are able to create massive liquidity, okay, in these markets, and you can kind of see the exposure values are massive, okay. But basically, long story short, is this is how it creates liquidity in the S&P 500. It also has exposure to the United States Treasury bills to get even a little bit more liquidity in there as well. Okay, so kind of neat how that's structured, and really all of this is just vehicles to get you super liquid, okay, and to be able to show us a bid ask ratio that's a penny away, okay, or a really tight bid ask ratio. So this position is very, very liquid. Okay, now what are the core assets in UPRO, and what are the core assets in the S&P 500? Right, well, it's the best stocks literally in America, literally the best stocks, in my opinion, on the planet. Okay. And you have Apple, Microsoft, Amazon, Facebook, Google Class A, Google Class C, Berkshire, Johnson & Johnson, Visa, Procter & Gamble, Home Depot, NVIDIA, MasterCard, United Health Group, JP Morgan, Verizon, PayPal, Walt Disney, Adobe, Netflix, Pfizer, Merck, AT&T, Intel, Comcast, Bank of America, PepsiCo, okay, Coca-Cola, and a few others. All right, but literally, Salesforce, Walmart, but all of the best 500 stocks on the planet are already inside of this. Okay, but its core holdings are really kind of in the top 10, right? So that's going to be Apple, Microsoft, Amazon, Facebook, Google, Berkshire, Johnson & Johnson, and Visa, right? You also got Procter & Gamble, Home Depot, NVIDIA that qualify in that top 10. But literally the best companies on the planet. They all have massive moats around them. Okay, and you do not want to own non-profitable companies in a global depression. You want to own the most profitable companies on the planet that have the largest amount of cash piles to put to work and have the largest moats around them, because they're going to go swallow all of the non-profitable companies during a global recession. Okay, so important to know that here. Okay, now what does the performance look like on UPRO? Well, okay, let's take a look. And this is as of the end of 7/31, and we do get these numbers at the end of the month. That's when the ETFs actually produce their new performance numbers. So next month I will have this updated, but this is the most current data that I have as of today. Okay, but pretty neat, folks. Since its inception, okay, it's averaged. This is the average, a 33.18% return. That's massive. That's more than 3 times, or 300% more than the S&P 500 has produced, more than well over 3 times. You're almost looking closer to 4 times the Dow Jones. Okay. Why? It's got that leverage ratio built into it. Okay. Now, it's great, right? But we want to protect the asset with protective puts, married puts for a safe ride. Okay. Or if you're using less than 50K, instead of using put options, what you're going to use is actually a risk off asset exposure. Okay. And we'll talk about that here in a minute. All right. So we do this work and watch the market 18 hours a day, 5 days a week. So you don't have to. Okay. And it really, guys, so this is our net long position. You can see it does have some leverage. It does massively outperform the S&P 500. It does massively outperform even more the Dow Jones Industrial Average. Okay, so just wanted to kind of show you guys what we do, why we're doing it. Okay, now the buy and hold portfolio, folks, it's great for accounts $50,000 or smaller. Okay, this portfolio uses ETFs to be long or short specific asset classes. All right, and really, guys, this is the easiest strategy to follow and to replicate that I have ever seen. I've been in financial publication really for about between Jason and I, about 34 years, right, that we've been in this industry. And this is by far and away the easiest thing we have ever seen to follow. With our previous company, we had 35 different hedge fund managers, investment gurus producing products. This is by far and away the easiest program I've ever seen to replicate. All it does is use ETFs to be long or short specific asset classes. Okay, my 7-year-old has this portfolio built. Okay, literally it took us 3 or 4 minutes to build it. Okay, doing simple math, we used a calculator and a brokerage account. And literally my 7-year-old was able to structure the buy and hold account. So if he is able to do it, I'm sure you guys are more than capable of doing it as well. Okay, and it's just really neat. It will literally take you less than honestly 30 minutes a year to produce the work to create the type of return that you're going to need with your capital with this portfolio. Okay, and plus, guys, a nice thing to know as of this week, we will be raising the price of the buy and hold portfolio. We're actually going to increase it 100% from where it is now. So make sure to get signed up for it today before that does happen. Okay, and as our existing clients know, you will absolutely see that price increase. We're not kidding when we talk about it, and no, I will not give you the discount a few weeks later down the road when you ask. Okay, so I just wanted to make that really clear here. Okay, and really, guys, you only had 4 changes in 2019. Okay, this year we've had 7 changes. We've had a lot more volatility in the markets, obviously, this year, right? We had the most amount of volatility we've seen since 2008. And we actually had the largest down day that we've ever had in the market, and subsequently the largest up day we've ever had in the market after it, once the Fed jumped in there and started quantitative easing again. Weird. You guys will start to understand how much control the Fed has over the market. Okay. Now, no options are used. Okay. However, we still returned 25.31% in 2019. And our biggest drawdown month, guys, was only 1.6%. That same month, the S&P 500 had a drawdown of 7%. Okay, so it minimizes the risk of the S&P 500, but you still get phenomenal results. Okay, and it's just nice, guys, when you have less drawdown, it's going to help you sleep at night. Okay, and what this portfolio would do is once we see volatility coming into the market, what we'll do is actually get you guys out of stocks, get you into bonds. Bonds skyrocket, specifically treasury bonds skyrocket when the markets sell, and that's how we're able to create massive profits during Q1 when everyone else literally out there lost their butt. Okay, so we're going to show you how to do that by simply just being long or short ETFs, okay, in specific asset classes. All right, buy and hold trades are always done on Mondays, guys, at noon Eastern. Okay, and just remember, guys, all memberships are tax deductible for the year in which they are made. So Virgil, make sure, bud, and I know you're going to expense through your LLC, so awesome job there. So Virgil, guys, that just joined our program yesterday, he actually has a net zero expense ratio to get our help for an entire year with the Pro Portfolio and the Bootcamp both. Okay, so pretty cool to take a look at here. Now, let's go ahead and take a look at the Pro Portfolio. Okay, very attractive to investors with 100,000 to put to work. This portfolio will show you how to trade like the top hedge fund managers without the 2% management fee and 20% performance fees. Okay, so I'm going to do some really quick math to show you guys why our business model is growing in popularity. Okay, and we're going to take a look at this here live in this webinar. Okay, so let me shrink this down. So I'm going to put this calculator right underneath the performance fee on purpose. Okay, and then I'm also going to grab my other calculator here, pull it into the screen. I'm going to shrink it down a little. That way we can look at what the fee is going to be too for the management fee. all of which you will not have to pay for with our help. And we're going to show you the same risk parity strategy that's utilized by Ray Dalio's hedge fund. And if you don't know who Ray Dalio is, he became famous because he's one of 3 people on earth that's ever been able to make money for his clients for more than 20 years straight. Okay. And he did have the net largest return in capital for that same 20-year time span. Okay. So let's take a look, guys. Okay. And let's see what this management fee looks like. So let's just say you have $1 million and you're going to put it into X hedge fund. Okay, you can't do that with Dalio's because his is closed. They haven't accepted new money for quite a few years now. But let's say you went into X hedge fund because they made 20% last year and they did it safely. And you think, and you say, hey, that's great. I want to see what that looks like. Okay, so we're going to use $1 million in calculator left to calculate the management fees, see what that looks like and understand this 2% management fee. Okay, calculator right, we're going to calculate performance fees. Okay, now, so your management fee is going to be 2%. So we have $1 million, as you can see here. Okay, I'm going to multiply that times 0.02 to get us 2%. Okay, you're going to see their management fee alone is going to be $20,000. Now, they're going to charge you that management fee if they don't make you money. They're going to charge you that management fee if they do make you money, but it's always going to be there. Now, let's say Fund X does 20% return. Okay, awesome, right? 20% return is a great year. It's more than double the return of the U.S. equity markets, right? If you look at index basis over their creations, right? And, easy way to look at that, guys, Dow Jones is a little under 9% over its entire lifespan. Okay. S&P 500 is right at 10%, just slightly over 10%. Okay. But let's say if this fund gets you 20% return. Okay. So they're going to make you 200,000. Okay. But we have this 20% performance fee. So if you take that $200,000 profit, okay, you multiply that times 0.20 for 20%, obviously, right? That's $40,000 in management fees. So between your management fee at 20,000 and your performance fee at 40,000, okay, you're going to pay 60,000 in fees. Okay, so you're going to have your initial profit was $200,000. Okay, but you're paying the fund $60,000 in fees. Okay, you're left with 140. Hey, not a bad year though, still, right? You're making $140,000 doing nothing. Okay, but your management fee, okay, is $60,000. Okay, and so that's what it's going to be between the two. So between the management fee and the performance fee, it's going to be about $60,000 that the fund's going to charge you. And here's the thing, guys, you cannot write off that cost. Guess what? You can write off our cost. Okay. Now, there's going to be some differences between us and the hedge fund. Okay. We're not going to manage your money. Okay. We're going to watch the market 18 hours a day, 5 days a week. So you don't have to. Show you how to use proper risk management, just like the hedge fund's going to do for you. Okay. But you're going to have to click the buttons. Okay. In the pro portfolio, it takes about 8.5 hours a year worth of work to replicate the results. Okay. But if I'm not sure what the calculation of your time is, but if you're willing to save, kind of $60,000 a year by clicking 4 buttons to enter and clicking, 3 buttons to exit, either on your phone or your desktop, okay, we can save you a lot of money and actually outperform the 20%. Okay, and that's our goal, guys. We're actually consistently looking to make at least 22%. Okay. So let's just see, and let's take a look, right? So with our company, you take $1 million, okay? We make you 20% return, okay? Now, if you take a look at our lifetime fee, okay, let's subtract that off from our $200,000 profit, okay? And let's see what we're left with. Wow. You make $40,000 more in that scenario. That's only if we make 22%, or only if we make 20. We're actually aiming for 22. Okay. But the money that you're left over with is a heck of a lot higher. Okay, more than $40,000 more if you're willing with the pro portfolio to take 8.5 hours to replicate the trades throughout the year, or if you're doing buy and hold, okay, you're literally going to take less than 30 minutes in the entire year to replicate our trades. Okay, and it's really cool, guys. We have flat fees. So the more money you use with us, the more valuable our service is for you. Okay. So pretty cool. And just wanted to show you that, guys. Now, and the cool thing in this example too, guys, that's what you keep for a year, right? And that's with our lifetime fee. You never have the management fees or performance fees ever again. So let's take a look at the hedge fund. They're charging you $60,000 a year. You stay with that fund, let's call it 15 years. You're going to pay them $900,000 in fees. Okay. You know what? You work with us for the next 15 years. Our fee is flat on the lifetime. You pay for it 1 year, and the rest of the years you add the money up. Okay. So pretty cool. And just wanted to cover that example really quick. Does that make sense to everyone really quick? And a lot of people don't know the hedge fund. They call it the 2 and 20 rule, right? So 2% management and then 20. So they're going to charge you 2% on the management of the money and then 20% on the performance. It's called the 2 and 20 rule. And we just looked at examples on how if X hedge fund does 20% return for you, net result to your pocket's actually only going to be $140,000, and they're going to keep $60,000 to keep their company going. Okay. Does that make sense to everyone? Just want to make that super clear. Okay, cool. And jump in there, guys, if you have any questions as we're kind of covering through this. Okay. Now back to the pro portfolio. So changes will be made on a weekly basis. So you're going to have a lot more trading that's done on the pro portfolio. And we want to always do this to ensure maximum protection of our capital. Okay. Now you're going to get 6 to 8 hours of live education and training every week. Okay. Sophisticated balance of core asset classes. You simply buy the ETFs. Pro members enjoy the exclusive content produced in the Wednesday and Friday webinars. Okay. And pro training is going to be every Monday, Wednesday, and Friday at noon Eastern, like clockwork. Okay. So pretty cool. So there's going to be a higher level of interaction there, higher level of education delivered with the pro portfolio. And always, guys, keep in mind, all memberships are tax deductible for the year in which they are made. Okay. Now, we also have our boot camp. This program is for the investor who wants to learn how to fish, what lures to use, and why. Okay, perfect for the investor looking to grow their knowledge on the options market. We send out the options trade specifically to take advantage of the lucrative opportunities and powerful ongoing training that come from an experienced trader's desk. Okay, and the bootcamp training modules are going to be Thursday at 3 Eastern. So this is one of the few things that we're not going to be doing at noon. Okay, but this is the boot camp. It's not one of the portfolios. So that's the easier way to separate the difference in time. Okay, and it's pretty cool, guys. While it's available, you're actually going to get access to the boot camp as a free 30-day bonus. Okay, as a limited time offer when you sign up for either the pro or the buy and hold membership. Okay, and once again, all memberships are tax deductible for the year in which they are made. Okay, so the last level of service, guys, that we have is our all access VIP lifetime membership. Okay, and that's going to get you an exclusive members only webinar every Tuesday at 3 Eastern. Okay, a phenomenal group of investors that are in there. Some incredibly savvy people. You got all kinds of different investment ideas and business structures happening in those webinars, and some people kind of forming together to create some real estate investments, all kinds of cool stuff that's going on in there. But just kind of neat, guys. And when you do upgrade to the lifetime, you will get that exclusive access. Now this is limited to the number of people we'll ever let into the lifetime. Okay, that is limited to exactly 100 clients. We currently have 80 in there exactly. Okay, so 20 in there exactly. So there's 80 spots open. And just as our members, jump into that, that will eventually go away completely. They'll still have that access on Tuesdays for life, but your ability to join the lifetime membership will eventually go away, because that's something we're using to help our business grow, get us to the numbers where we can shut the doors on the pro membership, which we're only going to allow 1,000 people into, and the buy and hold membership, which we're only going to allow 3,000 people into total, period. Okay. So pretty cool. But this is available to you for the time being. Okay. Now, guys, let's take a look at inflation. Okay. I can't tell you how many people I talk to that are just absolutely clueless to how much inflation hurts their money. And it just shocks me every time I talk to someone. They say, "Oh yeah, Dean, I have $500,000 sitting in the bank, or I have 200,000 sitting in my trading account. I just don't, I'm scared to put it to work." Well, guys, I understand that, but you gotta realize, okay, inflation is eating your money. Okay, and inflation literally is the worst enemy of any investor. Okay, um, and really, while the Fed is sitting here printing money at record paces to get us out of the circumstance, you are so much better off to have your money in the market instead of being eaten away by inflation. Okay. And just think long and hard about that. Okay. Seriously. So, guys, wanted to take a real hard look at inflation is doing to your cash today. Okay. You want to be seated for this exercise. Okay. I want you to think about this. How much cash do you have in the bank or in a trading account that's just sitting there? Okay. Now get that number, write it down, put that next to your computer. Okay. Or if you want to share by typing in the chat box, awesome. Okay. Would love to see that, guys. But think about that. So this is your real. So take your real number. Okay. So maybe that's 100,000 or 200,000 bucks, 300,000, maybe a couple million for you. I don't know. Okay. But write that number down. Okay. And then let's look at what today's inflation metric is, and real inflation, not this government aggregated BS numbers that they put out. I'm talking real inflation. Okay, folks. And I want to kind of share with something that I've had probably over 100 of my clients now have texted me, called me and say, "Dean, I'm using your real inflation metrics. This is really cool. I can't wait to see what it actually is." Right. But what you can do, folks, is you can save your top 10 bills that you have this year. Okay. And literally the itemized receipts. Okay. Save that. I want, your favorite restaurant, save that bill. Your groceries, your Costco run, or your Whole Foods run, or your run to the grocery store, whatever that is, save that bill. Okay. Go buy the same exact products next year. That your favorite restaurant, go buy the same exact products the next year. Watch what happened to real inflation. Okay. Save your cost of your insurance, of your car insurance, your health insurance, your homeowner's insurance. Okay. Medical insurance. Good Lord. Insanity how much medical insurance is going up. Thanks, Obama. Thanks. Insurance rates are now up actually well over 200% from where they were before he took office and they had the Obamacare, right? But save all of those metrics, right, guys? Put it in a folder. Take your top 10 biggest bills. Okay. And then go buy those exact same products, or just check your bill statement, see what that is next year, guys, and see what your exact real inflation is for your household specifically. Okay. It's going to shock you. And inland, from everything I can see, is about 7 to 8%. Okay. So let's take that and let's do some math on it. Okay. Yeah, Virgil is saying $378 a month in insurance is killing me. Yeah, Virgil. Yeah, I hear you, bud. Probably independent contractor, independent business owner, right? So yeah. So yeah, that's a lot of capital, guys. I mean, heck, Virgil's paying over $4,000 a year in insurance alone, right? and save that bill, Virgil, so you can see where it goes next year too, bud. Okay, cool. So let's take a look, guys. So let's say you have, let's just call it $100,000 sitting in the bank right now. Okay, and we take that and let's call it in the middle. Let's call it let's call it 7.5%. Okay, that's what real inflation's doing to your buying power if you don't put that to work over the next year. Okay, yeah, Steven's saying his insurance is 600 plus a month. Dang, Steven, is that for you, bud, or is that for family as well? Okay, so let's okay, yeah, for a family. Okay, nice, Steven. That's actually not too bad for family. Uh, are you working for a pretty major corporation? Okay. So yeah, so here's what that looks like, guys. So literally, if you don't take your $100,000 off the sideline, okay, and today's 8/25/2020, if you don't take that off the sideline over the next year, this 7 to 8% is probably going to grow significantly when we're printing this much money. Okay. But think about that. If okay, yep, Steven's with the government. Yeah, absolutely. So it's highly reduced rate for you there, Steven. So that's good, and that's actually a low cost. Um, and yeah, it's just crazy, right? But if you guys take your money, okay, and let's just take the calculator or take the calendar here. Take a look. Right, today's 8/25/2021. If we fast forward, right, and we go to the same day next year, and if we don't talk and you guys don't put money to work by this date, okay, you may as well take 7,500 or 7,500 that's in either your bank account or in your trading account, okay, and go light it on fire, because that's what real inflation buying power just did to your money. Okay, now if you're on the coast, I mean, good Lord, if you're in the California coast, that's going to be up to 10%. Same thing. If you're in the New York coast, gosh, up to 10% as well. Okay. And that is what the real inflation rate is for these people. Okay. And so think about that. I mean, let's just say you have, $500,000 sitting in the bank or in brokerage accounts or kind of a mix across everything, right? Take that, multiply it times 0.075%. That's $37,500 a year you're losing to inflation. Okay, that's what's happening to your buying power. Okay, does that make sense to everyone? It's just always kind of a fun exercise to look through with people. A lot of people used to say cash is king. Well, Ray Dalio and I say cash is trash, and this is exactly why. Okay, cool. Yep, Virgil said it's making sense. Awesome, Virgil. Very cool. Okay. And thank you here, folks. Quite a few people are joining in here. So a couple new people I'm going to say hello to. Uh, um, Alay, thank you very much. Angela, let's see here. Daniel Goley, welcome in. Dewan, hey, Dewan, welcome in. Let's see here. We have Gurdeep. We have in Geronimo Medina. Hey, Geronimo, welcome in. Jerry No. Hey, Jerry, welcome in. Let's see here. We have John is new in. We have a Moto G7. Hey, welcome in, Moto G7. We have a Shelly S. Let's see here. We also have a Steven that's new and a Tim Sims that's new since we started up. So just want to say hello. Welcome you guys in. My name's Dean Gallagher. I'm an investment consultant and partner here with Portfolio Builder. Okay, guys. So we're just covering an example of what's real inflation is doing to your money, right? It's pretty crazy. And I can't tell you how many people I talk to day in and day out that are absolutely clueless to this. So I thought it's really good to share these examples here on the webinar. Okay. So literally, this is how much buying power you lose, folks, if you have $500,000 either sitting in a brokerage account that's in cash or sitting in a bank account that's just sitting there in cash. Okay, and sure, a bank might give you 2%, maybe even 2.5% if you have enough capital. Well, guess what? When the real inflation rate is 7 to 8% in your inland, it's not doing anything for you. And if you're really on one of the coasts, I mean, it could be as high as 10%. Really, California has the worst inflation of any place in the United States. Just continues to get worse. It's kind of everything they do as far as living there as an investor. But just important to know what that actually looks like. Okay. So very cool, guys. So, and this is a little bit of of an image here of what's actually happened to the buying power of the U.S. dollar. Okay, over time. Okay, now the risk parity approach, made famous by Ray Dalio. So, what's your solution to that dollar getting burned? Okay, well, we like to take on as little risk as possible. So that's why we love the risk parity strategy. That's why we studied it for 34 years in our analysis here and what we're doing. Okay, and really, or that translate how to make at least 15% a year safely. Okay, and we've certainly outperformed the living hell out of that number, but it's good just metric to use. And Dalio really is kind of sits right around that 15% number if you look at the last 20 plus years of his performance. Okay, now this was neat, guys. When Jason and I really started researching all of the best hedge funds on the planet, we found some really interesting data. Tons of funds that made profits for 5 years straight, tons of them, right? Now, funds that had profit for more than 10 years straight, that dropped the number down, hugely, over 60%. Then we looked at funds that were profitable for more than 15 years, dropped it. And then we looked at funds that had profit for more than 20 years or more, and that brought it down to 3. Okay, think about that, guys. 3 people on the planet have ever been able to make money for 20 years straight in professional money management. Okay, now let's look at the people that did it. Okay, Jim Simons, quantitative hedge fund, Renaissance Technologies, right? Capital requirements are extremely high, but they're not accepting new money, so you can't get into their fund if you wanted to. Okay, he's averaged the highest percentage return, but not the biggest capital return. That came from Dalio, and we'll talk about that in a second. Okay, next, Stanley Druckenmiller was able to do it as well, and he now has a family office. You can't even invest in his hedge fund. Okay, very typical in the hedge fund industry. Once the hedge fund manager makes over $1 billion, they then tell their clients, "Well, see you guys later," and we're just going to manage their own money. And so that's what he does now with his own family office. Okay, now Ray Dalio, Bridgewater and Associates. Okay, they are not accepting new money. Their capital requirement is extremely high. Okay, and I'm not kidding you when I say it's extremely high. Okay, and they're not accepting new money either way. And with the size of the fund, they'll never accept more money. Okay, but net returns, okay, over that 20-year time span, Ray Dalio returned more money for his clients than anyone that's ever done it in professional money management history. Okay, so once again, these are the only 3 humans in history that have been able to generate gains for more than 20 years straight. Ray has returned the most money, so we look deeply at what he does. We found that he literally is always long or short 3 asset classes, okay? Bonds, stocks, and gold. That's it. He's not trying to find the next home run technology company. He's not trying to find the next home run biotech company. That's absolutely a fool's game. The Motley Fool specifically will show you how to lose your money doing that, okay? But just kind of neat, guys, because really he has 3 asset classes. All right, this is the most liquid asset class in the world that's instantly liquid. Right, next is stocks, next is gold after that. Okay, so that's all he does, and it's really interesting, guys, because the Fed controls the bond market, the stock market, and also the spot price of gold. Okay. Now, here's a picture of Google's quantum supercomputer. Okay. We had mathematical confirmations galore from taking some of the hunches that we had. Okay. And we overlaid what the Fed was doing with their balance sheet. Okay. Nice. And Virgil said, I almost put money with Motley Fool. Glad I didn't. Yeah, Virgil, they cost me $250,000 when I was in my 20s from a tech company that was unprofitable, that went bankrupt, that they pumped for months and months and months on end. And I woke up one day with $250,000 less to my name. Yep. Company went bankrupt that they recommended, pumped the hell out of it. I think I found out that they spent like $30 to $50 million pumping up this one company that literally went bankrupt. So, I mean, they literally lost their clients billions of dollars on that one company alone. Really sad. But hey, you got to learn hard lessons in life. Thankfully, I was able to do that in my 20s. And now you guys know how I found Warren Buffett's rules. Literally, it was that same week. I studied everything Buffett had ever done, learned those rules, and put them to use. Now, so kind of back on this, guys. So here's Google's literally their quantum supercomputer. Okay. We were able to use this to kind of look at everything that the Fed had done for the last 92 years, overlay that, and basically learn that the Fed has complete control of the bond market, the stock market, and the spot price of gold. Okay. So pretty cool. Most people have never seen an image of it. I thought it was kind of neat to show. Okay, cool. So we used Google's supercomputer to crunch the numbers and discovered really all three of these money managers followed the Fed. Okay, and by allocating our portfolios, greatest concentration to bond stocks and then precious metals. Okay, so you have your largest allocation to bonds and stocks, and then precious metals will always kind of be a subset of that. Okay, we invested ourselves in the same goals as the Fed. All right. Next, we add a little kicker to it by using leverage to outperform the market. Then we add risk-off components to bulletproof the setup. Okay, to top it off, we monitor the markets 18 hours a day, 5 days a week. Okay, so you don't have to. We'll send you trade alerts if we need to make adjustments to the portfolio. Okay, so really, guys, so let's take a look at the portfolio design today. For investors with more or less than 50,000 to invest. Okay, now important note, guys, and this is going to be critical for everyone that's here in my level of understanding of where you are. Okay, so if you have more than 100,000 to invest currently, please type in simply 100K plus, okay, into the chat box. Now, if you have less than 50K, okay, to invest currently, please type in sub 50 into the chat box. Okay, that way, guys, I know exactly where you are, and that way I can understand what questions you're asking, okay, and how I can help best. Also, what portfolio we recommend to build out today, so you guys can make more money than the cost of our membership during your free trial period. Okay, and let's see here. Nice. Virgil said sub 50. Steven said sub 50. Very nice. Okay, awesome. All right, guys, and anyone else, just real quick, while you can, just type it in the chat box. And to locate the chat box too, folks, if you're new to Zoom, just scroll down to the bottom area of your screen here. Okay, when you scroll down in this area, you're going to see a gray bar that pops up. Okay, now you're going to see two icons that there's a number of icons, but there's two icons you can use to communicate with me. Okay, and specifically, guys, I want all of you to use the chat box. Simply type into the chat box, okay, and let us know if you have more than 100,000 to invest currently. Please type in 100K plus, okay, into the chat box. And if you have less than $50,000 to invest, please type that into the chat box as well. Okay, so very cool. And while you guys are getting that typed in, I'm going to get my screen set up here. Okay, so just make sure to type in if you're sub 50 or 100K plus into the chat box. That will give me a better understanding of kind of where you guys are and how we can best help. Okay, so thank you, John. Thank you, Adrian. Thank you, Virgil. Thank you, Stephen. Have the answers in there. All right, so we have 4 of 18 in there now that have responded. All right, guys. And once again, if you have over 100K, just type in 100 plus. And if you have less than 50K, just type in sub 50. Okay. And once again, just scroll down to the very bottom of the page here. Gray bar will pop up. Click on the chat icon. It's usually right around here. Okay. And then just type in sub 50 or 100K plus, depending on how much investment capital you have to use today. Okay. Okay. And thank you, Moto G. Very nice. Okay, so how much capital do you have working for you, and how much capital is sitting in the bank eaten up by inflation? right? So, and I love this, guys. I love the just the thought process in general, and love how nice it's been as an investor to have money work for me instead of working for my money. Okay. So up here it says, how much capital do you have working for you? Okay. And how much capital do you have being gobbled up by inflation? Okay. And it's funny, you can see the difference in these images, right? One goes up, one goes down. That's exactly what's happening to your money today. And literally, guys, just like in 2009, when the Fed started quantitative easing, markets rocket. The cost or the buying power of your dollar drops through the roof, drops through the floor, I should say. Okay. So nice. Moto G and John, thank you very much for those answers there, guys. Okay, good. Looks like we have answers from almost half the crowd so far. So keep typing in those answers, guys. And then once we have a couple more in, we will go ahead and roll on to the next slide here. And we'll take a look exactly at how to structure that portfolio. Okay. Very cool. And Virgil, I know you said you're going to scale up to over 50 long term. Are you just moving in some capital still at this point, or what did that look like for you, bud? Okay. Very cool. All right, guys. Very nice. And Moto G7, if you could type in your name too, your first and last name, that would be greatly appreciated too. Just so I know who you are, because I don't know with that with the cell phone. Unfortunately, I wish but if you could just type in Moto G, your name, that would be awesome too. Okay, guys, and just give me 1 second here too. Okay, cool. All right. And looks like we have a few more answers. So very cool. All right, guys, without further ado, and just think about this, guys, right? How much capital do you have working for you, and how much capital do you have sitting in the bank being gobbled up by inflation? Now, there's some important risk metrics that you want to think about, okay? I always like to think about, look, any good, um, you know, um, any good, what are they called? Wealth manager, right, is going to tell you, look, well, the first thing you do is set aside, depending on your risk metrics, how many people are employed in your family, you set aside at least 6 months or a year's worth of capital. Okay. And everything that you have outside of that set, guys, that's money that should be more than ever invested in the markets. Why? Because the Fed is printing money. It's devaluing the value of the dollar daily. Okay. But that skyrockets the markets. Okay. So you want to have your money in the markets, not being eaten alive by inflation. Okay. And just know, guys, um, you know, um, okay, cool. Oh, cool. Very nice, Virgil. Okay, awesome. Very cool. So yeah, Virgil, and what we'll do is we'll show you how to structure the pro portfolio today. And thanks for the note on that, bud. Okay, awesome. Very cool, guys. So once again, you can put your money to work for you. When the Fed is doing quantitative easing, it skyrockets markets and devalues the dollar. So where do you want to put your money? In the markets. Really, really simple. Okay. All right. Sorry about that. All right. So without further ado, let's take a look at structuring the 100,000 plus portfolio. Okay. And so let's take a look. And this is a copy of our trade alert, guys. Okay. And as you can see here, this is from yesterday. Okay. But this is still good to go. So this is what you can structure to build out our exact portfolio today, depending on if you have, really kind of more or less than 50K. Okay. And really, if you want to use more protection with just 25K, you can absolutely do that as well. Okay. So this is what we're going to do. Okay. For existing members. Let's see here. Oops, let me scroll down a little bit farther. So this is what you're going to do for our pro advisory. Okay. So our pro advisory, guys, is typically used by investors that have more than 100K. Okay, so I'm just going to put this up on the screen so it's kind of easier for you guys to think about. But really, most of our investors, okay, with this strategy have at least 50,000, okay, or more invested. Okay. Sorry, my drawing skills aren't the best. Okay, but the pro advisory, right, is good for accounts that have more than 50,000. So just wanted to annotate that really quick, okay, and have it on the screen just in case you had to look away from the screen and look back, okay. And Ryan also typed it into the chat box. Thank you very much, Ryan. Appreciate that, bud. Nice and clean too. Very nice. Okay. So how to follow our trading plan per 25,000? Okay. So this is what you're going to buy, guys, per 25K that you have. Okay. And it's really incredibly simple. So, and so let's just say, let's just walk through Virgil's example here to start. Okay. So Virgil just signed up with us yesterday. So I'm going to take him to the front of the field here. Okay. So how to follow our trading plan per 25K. So this is exactly what you're going to do right now, Virgil. Okay. And this is the portfolio recommendation. Okay. And until you have that capital built up to the next tranche, once you have 2 tranches of 25, then you can always go build another one. But for now, while you're kind of gathering some capital together, this is where you're going to want to start. Okay. So you're going to buy 400 shares of UPRO. Okay. And Virgil, one quick question for you too. Did you get your options approved yesterday as well? Or at this point, have you had your options approved with TD Ameritrade? Okay, so this is going to be per 25K. Virgil's simply going to buy 400 shares of UPRO. Okay, and I'm going to type in the chat box. Okay, per 25K. Okay, cool. Perfect, Virgil. All right. Simply 400 shares of UPRO. And you can just buy those with a limit, Virgil, on the ask price. That's going to get you a fast fill and get you exactly what you want. Okay. And then you're also going to buy to open 40 of the 918.22 puts. Okay. And so what I'm going to do here, guys, is let me clean up these annotations actually really quick. And then I'm going to show you guys how to execute this in your accounts as well. Okay. So let me turn these off. There we go. And what I'm going to do here is go over to my other accounts here. Okay. And pretty cool. So we built this during the last presentation just to see everything. Pretty cool, guys. Wow. Week to week, we made $4,642 dollars profit from the last time we structured this UPRO. But I'm going to go ahead and close this out. Okay. So I'm going to sell this right now to get out of this so we can, and I'm just going to change this to market because it's super profitable and it doesn't matter for me. So that's going to exit that. And then we're going to go rebuild another set for that. Okay. So now I have no positions left. That $4,000 that we made is gone. And this is so cool, guys, because I keep building this and closing it out literally every 2 days. And then we let it ride for 4 days, for 4 trading days. And just doing that alone, not actually even really following the strategy, it's still made $6,248 in profit just in the time we've done that. Okay. So let's take a look, guys, and let's build this portfolio live. So Moto, G7 and Virgil, I'm going to walk you guys through exactly what that looks like with Thinkorswim's account, okay, through TD Ameritrade. So let's go ahead and do those exact instructions. All right, guys, and I'm going to take a look, and let's just say that my total investable dollars, and actually let me grab one thing to annotate this to help you guys see a little bit better. Okay, so my available investment dollars in this account is 105K. Okay, now this though says our instructions or our tranche, okay, is per 25,000. Okay, and if you don't know what a tranche is, it's simply a set amount of capital you're looking to invest in the market. Okay, so our tranche, our set amount of capital is 25,000 currently. So let's take our calculator. Okay, oops, and I'm actually gonna, so I'm gonna use this for my example here. So I'm gonna leave that right there. So my available investment dollars is 105K, right? So what I'm gonna do here is I'm gonna go over to my calculator. Okay, I'm gonna take my 105, it's 105,77627. Okay, I'm gonna take that because that's my available investment dollars. Can everyone see that? And does that make sense to everyone? Okay, now I'm going to divide that per $25,000 tranche to see how many tranches I'm going to have. All right, so I simply take my calculator, I take the 105,776 and change. Okay, I simply, I divide that, okay, by 25,000. To understand, I can build out 4 tranches today, right? Because obviously 105,000 divided by 25,000 is 4 and change, right? But I can build 4 tranches. So that's what I'm going to show you guys how to do here live. Okay, so step 1 is to buy the shares. Step 2 is to buy the put options to protect our capital. Okay, so that's step 1 that's in the chat box now there, and step 2 that's going to be in the chat box as well. Okay, so what I'm going to do here, guys, because I have 4 tranches, is I'm going to buy, instead of 400 shares, I'm going to multiply that times 4 because I'm building 4 tranches, right? Okay, does that make sense to everyone? So how many shares am I going to be buying total if I'm buying 4 tranches of 400 shares? What's the total amount of shares that I'm going to be buying today as we get this set up? Okay. And we'll use, and feel free to go ahead and type it in the chat box, guys, if you know that answer. Okay. So the instructions are to buy 400 shares. Okay. But I have 4 tranches. So I just take this buy 400 and simply, hey, Adrian, nailed it. Nice job, Adrian. Yep. So I take that buy 400 shares instruction, multiplied it times 4, that equals 1,600 contracts. An awesome job, Adrian. Adrian gets an A for paying attention there. Okay. And so next I'm going to ask how many option contracts I'm going to buy, guys. So start thinking about that. Okay. So I know my step 1 right now. Okay, because I have $105,000 just sitting here getting eaten up by inflation, theoretically, right? It was invested. We've made money investing it, but hey, let's go ahead and structure a new tranche so I can show you guys live. Okay, so I understand I'm going to follow this first step to buy 400 shares. I'm going to take that, multiply it times 4 because I have 4 tranches of 25,000. Okay, and we're going to let's put that money to work. So let's not talk about it. Let's do it. Okay. So I take my UPRO, okay, and I'm following this step right here. So I simply type in UPRO. I go to the ask, okay. I'm going to type in, you know what? Let me see if I can shrink this just a hair, just for make it a little bit easier for training purposes. Let's see if I can get a little bit better of a visual for you guys. Okay, cool. Yeah, it looks like I can. Okay, cool. So I'm going to take this, my notional 100 shares. I'm changing that to 1,600 in the quantity area right here. Okay, so where you see QTY, that's just an abbreviation for quantity. I'm changing that from the notional 100 to 1,600. Okay, I'm going to look and see what the bid and the ask is. So I see that the ask is 60.45. Okay, I'm going to expand this price here a little bit. Okay, and I see that is 1646, bumped up a hair, but I can buy that instantly now. And guess what, guys? Just like that, 4 clicks, I have 1,600 shares of UPRO. Okay, and I got my fill. Now, all I have to do now, so step 1, check. Step 2, we're gonna take our diversified asset that already has 500 companies, guys, inside of UPRO, all of the best companies literally that are out there, right? That we were just talking about earlier. So it's the 500 best top publicly traded, most profitable 500 companies in America are in the S&P 500. Okay, now we own that, and now we own quite a bit of that, right? It's pretty neat, guys, because now that's structured in our portfolio. Okay, we now own those 500 companies by owning a single ETF, and it took 4 clicks to go own that and put that money to work. Okay, now let's follow step 2, which is right here to buy to open 40. Okay, and sorry guys, let me scroll up just a hair. Okay, so we're going to buy to open 40 of these XLF puts. Now, we're specifically, guys, and does anyone know what the XLF ETF is so far? I guess before we get to that, and guys, feel free to raise your hands and mute your microphones too. I want as much live interaction going here as possible, right? That way you guys can get the most value from me during your trial period, and you can be beautifully set up and just ask me questions here live, guys, as we're working through this together. Okay. All right. So let's go ahead and take on the next step here. Okay. Now, once again, I know per 25,000, I'm going to buy 40 of these contracts. Okay. But I'm going to multiply that times 4 once again. So Adrian and everyone else out there, how many contracts am I going to buy of the XLF ETF put options? Okay. If I'm using 4 tranches here in my example, how many put option contracts am I buying today, guys? If the instructions say to buy 40, but I'm buying 4 tranches. Bingo. Man, Adrian is on it. Very nice, Adrian, with the quickness too. All right, guys, let's see if anyone else but Adrian can figure that out as well. Okay. So once again, the instructions say to buy 40 of the 8/19/2020 XLF put options. Okay. But I have 4 tranches. So who else knows how many option contracts I'm going to buy here? Okay. Nice. Steven's on it too. Nice. Steven gets an A. So Steven and Adrian's have A so far. Great job, guys. Okay, let's see here. I haven't heard from my ladies yet. Let's hear from Angela. Let's hear from Cecilia. Let's hear from Sylvia. Let's see here. And then haven't heard yet from Eric Stone or Hazel, Jerry Noe, John, Luis B. Hey, Luis, I haven't heard from you yet. Let's see here. Okay, and Moto G. Please ask any questions you have, bud. Let's see here. Sylvia, Sir Victor Agu, Stephen, Thomas, and Thomas, I'm not going to try your last name, but thank you very much for joining us here, Thomas D. Thank you. Appreciate your time to join us here. And Tim Sims. Okay. Very nice. All right, guys. So let's go ahead and put that to work. We got some good answers there, and thank you all for your participation. Greatly appreciate that. So I'm looking for the 9/18 XLF 2022 $22 put. So I typed in XLF. Good. Okay, I have my complete option chain here. I can drop that down. Okay, here I do see the 9/18 2020 puts, right? So those are the monthlies, which I can see here. Okay, and I do see my $22 strike right here. Okay, and once again, folks, I know how many option contracts I'm buying because the instructions say to buy 40. Okay, but I have 4 tranches. So I'm going to buy 160 option contracts here. Okay. Yes, Stephen. So you don't need TD Ameritrade by any means. And great question. by the way. You don't need TD Ameritrade by any means. That's just how we do our training. Okay. So you can certainly use Schwab or E-Trade or TradeStation or Interactive Brokers or Fidelity is another really popular one with our clients. Okay. You don't have to switch brokers, but we do all of our training on TD Ameritrade. But all of the same brokers, guys, will have the ability to click the same buttons and place the orders. Okay, really, no matter what the platform is that you're using, no matter if it's TD or Schwab or Fidelity, E-Trade, Interactive Brokers, TradeStation, right? They all have the same ability to trade. We just use this for our representation, our training, and showing people how to do it. Okay, but on that too, guys, if you haven't opened a brokerage account yet, or you're in the process of switching, TD is phenomenal. Okay, they do offer the highest level of customer service of any brokerage out there. That's why they're the only broker we recommend, and that's why they're the only broker we train on. Okay, because we want the broker to match the same level of white glove customer service we're going to give you guys as clients. Okay, so now, guys, I've located the correct option strike, right? The 918s, yep. Got XLF as my ticker, yep. Got the $22 strikes, yep. Okay, cool. Yeah, Stephen, you can certainly use Fidelity and T Rowe Price as well. Okay, and I think I'd say probably 30 to 40% of our clients are probably using Fidelity, Stephen. And guys, Stephen asked to, just to bring up his question, they typed in, he said, are all trades on TD Ameritrade, question mark. Okay, so yeah, we're going to do our examples on TD Ameritrade. That doesn't mean you have to use TD Ameritrade by any means, shape, or form. You just need a brokerage to replicate the work that we're doing. Okay, so without further ado, guys, let's go ahead and add our protective put option. Okay, so we have that protective risk off asset in our structure of the portfolio. Okay, so we can take some risk off the table there, guys. Okay, and grab this 160. So once again, okay, so I followed these instructions. I found that my ticker's XLF. I found the correct option chain, found the correct strike, changed my quantity from the notional 10 to 160. Okay, my price is right at the ask. So that's what I'm locating. So I'm going to go ahead and confirm and send that. Just like that, guys. Step 1 and 2. I own now 500 of the best companies on the planet. I've absolutely eliminated the individual business risk as part of the ecosystem of the assets I own, right? So let's just say you own Boeing, for example. Massive business risks in Boeing right now. Okay, one of the worst performing S&P 500 stocks last year. Well, guess what, guys? Boeing went down about 75% last year, right? They had all the 737 mess, right? But you know what? The S&P 500 went up over 25%. Okay, so it's a perfect way to show you eliminate the individual business risk by maybe owning a Boeing. Okay, and instead of that, you just own 500 of the best companies on the planet. And as they all grow, you grow. And even if you do have one bad apple in the group, last year, the prime example, right, was Boeing. Guess what? It went down 75%, but the S&P 500, well, still climbed up over 25%, right? Beautiful way to eliminate individual business risk. One of the beautiful things about ETFs, okay? And this will show you guys why the big hedge fund managers don't really own individual companies for the most part, right? And if they do, they'll never own it at kind of more than 5% of their total allocation ever. Okay, so we're going to show you guys the same risk parameters that hedge fund managers use, okay, from our experience. All right, guys, so let's go ahead and take a look at the work that we did. So the instructions were to buy 400 shares of UPRO per 25K, and then to buy 40 of the option contracts. But like I was saying, we bought, and I'll annotate this here really quick. Okay, we bought 1,600 shares. Okay, and then we bought 160 option contracts, right? because we have 4 tranches. And apologize for my my ability to draw with the mouse here, guys. It's slowly improving week to week, but it's still pretty bad. Okay, does that make sense to everyone? Okay, so that's how we allocate, literally, guys, per 100K, or if you're going to allocate 4 tranches, or use about 100,000 to put to work. That's what we just did together here live. Okay, now let's take a look and see what that did. Okay, in our portfolio. So to look at what we just built, I simply have to go back a few screens here. Okay, and I'm going to go to monitor. Okay, so I see that I have my XLF, my UPRO. Okay, and I'm going to have to adjust these around so we can see quantities. Okay, so there we go. Sorry, I have to shrink these to see the quantities. Okay, so you can see here when I click on the drop down of UPRO, I do have 1,600 shares. Okay, exactly what I want. Perfect. Now, if I want to double check on my XLF, yep, I do have 160. All right, so perfect ratios there. Okay, I do have my capital working. All right, and let's take a look. So I bought the UPRO. Okay, so I have my diversification across the 400, the 500 best companies in the United States there. And then I also have my option protection here that does really insure us kind of for the next 3 weeks here, guys. Okay, and that's it. That's how we do the build on the Pro portfolio. Any questions there from Moto G? Let's see here. Who are some of the other people over 100K? Let's see here. Okay, and Stephen, were you working with more or less than 100K too? Okay. All right, guys. So nice. Now, Stephen, Virgil, John, Adrian, and also another John, we're going to go ahead and go through building out the portfolio for anyone that has less than 50K. Okay, and real quick, going once, going twice. Moto G, anyone else over 100K? Let's see here, Angela, Thomas, anyone else over 100K? Do you have questions on how to build out that Pro portfolio and get that structured? Okay, so that is built out, guys. Okay, now, so I do have an additional 7,000 left in capital. So I can actually just show you guys what that looks like to build the 7,000 too. Okay. Now, so the buy and hold strategy, guys, really, we really need to change this to under 50K. But really, guys, everyone using this buy and hold strategy that I know of is using much less than 50K behind it. Okay. But not to say you can't use a lot more too. Just that's kind of how it's worked with what our customers wanted for them. Okay. So very cool. So once again, we're looking at the difference between the buy and hold portfolio, and really, guys, this is the best strategy for accounts under 50K. It has a little bit more risk, right? Because you're not using that option to protect your capital. You're actually going to use another asset class. Okay, and in this example, and for our current setup, we're actually using silver as our risk off asset. Okay. And so let's go ahead and get that built out now. So I do see that in my brokerage account, I have an extra 7,000 bucks. Okay. And as you'll notice here, you can allocate this per $1,000. Okay. So we can go ahead and allocate this. So let's take a look, guys. So if I was doing buy and hold and I had 7,000 bucks, how many tranches am I going to have? If I have 7,000, right, to invest, and the buy and holds built per $1,000 tranche, folks, how many tranches am I going to build out? Okay. Nice. John is on it. Very nice, John. John gets an A+ there. Okay, and Virgil gets an A plus. Nice. Very nice, gentlemen. Okay, who else? Surprised we haven't heard from Adrian. He's been super fast. And Steven. I think they might be building portfolios though here as I talk, so that's good. Okay. All right, guys. And so, John, and let me ask you, Bud, how much capital do you have in cash that you're looking to put to work today? Okay. And if you guys, everyone that is sub 50, if you want to just type in and just say, 30K, because that's how much capital you're looking to invest, or type in 20K or 15K or, 47K, whatever that number is, guys, go ahead and type that into the chat box. That way we know what to build for you guys. Okay, cool. And John's looking to allocate 30,000 today. Okay. So let's build this here for John. Okay, for a $30,000 build. So what I'm going to do here, guys, is I'm just going to create closing orders for these positions I put on, just so we can go ahead and build any size of strategy. Not to say that you're going to, you need to close out these orders. I'm just doing this because I want to be able to walk John through a setup using 30,000, right? So we're back to 0. Okay. Nice. And Marcus is looking to put in kind of 10 to 15K. Nice, guys. Keep those coming. Okay, cool. So it's funny. Both Johns look like they're going to use 30K. So how perfect. So both Johns, let's look at structuring what that looks like for $30,000 today. Okay. So we're going to have 10 shares of UPRO. Okay. And we know, right, that if we have 30,000, okay, we're going to take that, we're going to divide it by 1,000 because that's our tranche size. Okay, and we're going to have 30 tranches, right? So how many shares of UPRO am I going to buy there, Johns, if I'm using 30K? And subsequently, how many shares of SLV are we going to buy as well? Adrian with the timing. Adrian has been fast today. Nice, Adrian. Nailed it. Yep. Okay, what about SLV, Adrian? Yep, 30 tranches, Virgil. Yep. We're going to use 30 tranches. And how many shares of UPRO are we going to buy first? So we take the instructions to buy 10 and we multiply that times our 30 tranches. So we understand we're going to buy 300 shares of UPRO. Okay, and this is for John, both Johns that are going to start with 30,000. Okay, it's really cool. Both Johns. I actually had a gentleman named Soful that he started our buy and hold program on Friday. He allocated $25,000 when he signed up yesterday for the buy and hold program. He actually already had made 414 bucks. Literally bought the last few minutes of the trading day on Friday, and just into yesterday. Already built up a $414 profit. Really wanted to learn more about options, so he got set up yesterday. Okay, and he actually texted me, say, "Hey, Dean, I'm actually over 600 already." So pretty cool, guys. That's 2 trading days, right? With someone that just put 25 to work. So, I mean, putting 30 to work with the strategy will actually make you a significant amount of money in a pretty short period of time. Okay, with the way we're set up, because of what we understand, how the Fed's going to push the market into new all-time highs. Okay, so let's go ahead and grab 300 shares of UPRO for step 1. Okay. And now, guys, we're looking at a $30,000 example here for John, and then Marcus will run your example too. Okay, so let's take a look, guys. So 300 shares of UPRO. So this is this. I'm just going to type in here 30K allocation to buy and hold. Okay, and it's going to be 300 shares UPRO. Okay, and guys, how many shares of silver am I going to have if I have 30 tranches and the instructions say to buy 5? Adrian, on the money, man. Love it, Adrian. Okay, Adrian gets an A plus for actually Adrian gets an A plus plus because he's literally on the second when I ask the question every time. Okay, John, perfect, John, good answer. All right, let's see if anyone else out there is paying attention. Okay, very good, guys. Okay, so we know we're buying 300 shares of UPRO, and as Adrian and John did mention, we will be buying 150 shares of SLV as well. Okay, so give me 1 second, guys. I'm going to type that into the chat box just so everyone has that shown in there. Okay, so once again, we got our 300 shares of UPRO. So let's put in that work. Okay, click ask, change notional 100 to 300. Double check my ask price is where my bid is. Perfect. Just like that. With 4 clicks there, guys, we are in the process of buying, okay, 300 shares of UPRO. All right, and now let's type in SLV, and we know that we're going to buy 150 shares of SLV. Okay, so once again, I'm just going to the ask price here under the trade grid. Click the ask, change from 100 to 150 for SLV. Okay, I'm going to double check my ask price. That is where my bid is, so we should get a pretty fast fill. Okay, and that's it, guys. That's as much time as it takes to structure 30,000 bucks. I mean, it's literally, actual work time. What is that? Less than 30 seconds to structure the buy and hold portfolio. Okay, so very cool. And so silver is our hedge, right, for the buy and hold. Okay, why? Well, because precious metals tend to go up when the markets crash. Okay, and then if we see a severe crash, which we're not anticipating anytime soon, really, we will switch into bonds, which is we typically use TMF because it's a leverage bond position. And so if we see some pain coming to the market, we'd get you all out of UPRO, okay, or get you out of a majority allocation to UPRO at least and grab some bonds. That way you can profit from the bonds while the market sells off. Okay, and really, guys, that's the beauty of risk parity. Okay, very cool. Okay, guys, any questions there? All right, guys, and let's see here. Yeah, and guys, go ahead. Feel free to unmute your microphones, raise your hands. Okay, and just real quick too. Let's take a look at this just for fun, so we can show you guys the differences in some of these numbers. And you know what? Let me change this setup so I can show you guys. Okay, should be a little bit easier to kind of just walk you guys through the portfolio with this setup. Okay, so a little bit bigger buttons and icons here. All right, so let's take a look here. And let's take a look at the S&P 500. Okay, so for the day, guys, we see that it's up 0.06%. Okay, now let's take a look at UPRO and see how it's massively outperforming at exactly 0.18%. Okay, so it's actually, as it's bobbling right here, actually more than 3 times outperforming the S&P 500. Yeah, so Stephen, you can absolutely allocate across the two brokerage firms, right? So just take your total capital between T. Rowe Price and Fidelity, and let me know what that number is. Okay, and then literally you can divide up the shares and the ownership between the two accounts, so that way you can use that to hybrid. Okay, and yeah, guys, the buy and hold is so cool because you can hybrid it across multiple accounts just so extremely easily. Okay, you can do it with the Pro too. It just you just have to pay attention a little bit more, and it's kind of tough to factor the options to non-options. in your head quickly. If you're experienced, you can certainly do that. But if you're new, buy and hold is just super simple. Yeah, Steven, my pleasure, bud. And how much? Oh, there we go, guys. We got our silver. Okay, that just filled. And Steven, how much did you have between T. Rowe Price and Fidelity both? Okay. And Steven, if you can, bud, can you type in your last name? I just we usually get so many Stevens on trial at the same time. Okay, awesome, Steven. Yeah. So you could awesome, Steven. Thank you for that, bud. So Steven G. Okay. And yeah, you could absolutely kind of hybrid that between the two accounts, Steven. Okay. So you could however that looks. So with the 15 total, you can buy 15 tranches today. Okay. And I think, oh, Marcus was looking at 15K too. So let's take a look at that, guys. Okay. Awesome. And so I just wanted to show you guys here too. Oh, XLF still hasn't filled. So let's see where XLF, or I'm sorry, UPRO hadn't filled yet. Oops. There we go. Okay. So it still has a buy. I think my buy is actually over the S now. So I'm just going to cancel this and just throw in a new order real quick. Okay, for UPRO, since it didn't fill yet. And I'm just going to go market just for this. And I mean, it's nice and tight, one sit, bid and ask. So we really don't care if we're not using a limit price here, guys. Okay. And I don't care about the exchange at all. So I'm going to change this to market here. And I just want to make sure I was buying the 1600. So I got to switch that up too. Okay, that way we can just get you guys a live fill here. Okay, cool. So there we go. So you can see here in our monitor tab, we do have 150 of SLV and we do have 1600 of UPRO. Okay, so very cool. And that is our exact ratio and setup there. Okay, so cool. Yeah, so Stephen, I would just I'd follow the directions, right? So for 15,000, what you're going to do is you're going to have 15 tranches. You're going to buy 150 shares of UPRO, and then let's see here. Let's see, 15 times 5. You're going to buy 75 of SLV as well. Okay. All right. Okay, awesome, Stephen. And then I'm just writing that down here so I have it in my notes that you're allocating 15 to buy and hold today. Yep. Awesome, bud. Absolutely. Okay, guys. Any other questions in here? Okay, let's see here. I haven't heard from Ale Tiwo yet. Adrian Jimenez, thank you for your awesome replication. And Adrian, how much capital are you looking to put to work today there too, bud? Okay, or how much capital do you have to put to work? Ale Tiwa, how much capital are you looking to put to work? Angela, what do you have in cash that's not put to work in the market? Okay, Adrian is going to be putting or has 20 to put to work. Okay, Adrian. Yeah, bud. So for you, let's take a look at what that is. Okay. And anyone that has a question, just type it into the chat box, guys, or just raise your hand. And then when you raise your hand too, guys, you can actually interact with me here live too. And we can actually just have a live speaking interaction. It's super cool. It's just the best way to get the most value from me. Okay. Hey, Thomas, I see your hand is up. Ryan, let's go ahead and unmute Thomas and let's see what questions he has live. Yeah, and Virgil, we'll certainly go back to the $25,000 example for Pro in a second. Okay. Okay, cool. Okay, John says he got to work and have to leave. All right, John. Hey, bud, thank you so much. And if you can, John, type in your last name just so I know, John. I know we have quite a few people named John on trial as well, so that'll just help me understand who you are. And if I get a text from you, I'll have an easier. um, yeah, Thomas says, when do we sell these positions? Great question there, Thomas. Okay, it's all going to depend on what the Fed does. Okay, and really the macro and geopolitical risks to the market. Thank you, John. Got that. Okay. All right. Okay, and that was John. Woo. So thank you, John, and have a great day at work, bud. Don't forget to put your capital to work either on paper trades or use real capital before you do. That way you can grow your capital and test out what we're doing before you actually have to pay for our service too. Okay, and that's the whole point of what we do, guys. We want to show you how to make money, right? And Thomas had a great question, guys. He said, when do we sell these positions? So awesome, awesome question, Thomas. Okay, we're going to tell you to sell them as we monitor what the Fed is doing to control the markets. Okay, and as we see what's going on in the world of the Fed. Okay, um, and just wanted to take you guys to look at a couple more things. So very awesome question there, Thomas. And Thomas, do you have a mic? If you do, bud, you can go ahead and unmute your microphone, and we'll actually take a look at what you guys are doing, why you're doing it. Okay, and then just encourage everyone to, guys, if you want to ask questions here live with me instead of typing them in, just raise your hand. Okay, and it's just a cool way to kind of get to know each other a little bit too. Okay, and type in those questions, guys, so you can literally have a live, beautiful interaction with me here too. And Thomas, Ryan is ready for you, bud. Once your microphone is unmuted, go ahead and just ask your questions here live. Okay, and Adrian, Latiwo, Angela, Cecilia, Eric Stone, Hazel, Jerry No, John, Louis B, Marcus, Mitch, Sylvia, Sir Victor Agu, Stephen, Tim Sims, and Virgil. Go ahead and unmute your microphones, guys. Okay, and we'll take a look at that. Okay, and so Virgil, did you want me to walk through the example on the Pro portfolio, or did you want me to walk through the example on the buy and hold portfolio for you, Virgil? Pro. Okay, perfect. Let's do that, bud. Okay, so I'm going to go ahead and scroll through here, guys. Okay, and let me just scroll up to there. Okay, so there we go, Virgil. So step one, buy 400 shares UPRO. Step two, okay, oops, sorry, buy 40 contracts of the 8/19/2020 XLF. Okay, and I'm going to go ahead and shrink my screen and just walk you through step by step. Okay, so you can see what this looks like. And I do the training, Virgil, from the desktop version of Thinkorswim. So give me 1 second here, guys. Let me clean this up just so you can, because when I enter the orders, it's really hard to have this the small text. But also after I enter the orders, it's really easy to show that. Okay, so that's why I kind of toggle between the two. So let's go ahead and work through that, Virgil. Okay, and so step one, buy 400 shares of UPRO. Okay, and Virgil's using exactly 25K to start. Okay, so you simply go trade, UPRO, click ask, change our notional 100 to 400. Make sure that you're on the ask price and hit confirm and send. Step one accomplished. Okay, then add the put options. Okay, I'm gonna scroll down just a little bit more. Okay, we're gonna buy to open 40 of the 8/19s of the XLF puts, right? So first step is I take XLF as my ticker. Type that into the trade box here. Okay, I'm gonna locate my option chain. So if it wasn't dropped down, I just click on the option chain. If the if the 918s, right, weren't dropped down, I'd simply find the September 18th. Okay. Then I'm looking for the $22 strike. So I have to go down, and maybe if my strikes were set to 6, I might not see the $22 strike. In that example, I wouldn't, right? But if I expanded it out to 14, then I can see that $22 strike. Okay. And then right there, I change the notional 10 to 40, hit send. That's it. Cool. Did that help, Virgil? And then you'll be able to go back through, Virgil, too, and replay this video as many times as you want to. Okay. Hey, Thomas, I see your microphone's unmuted, bud. Go ahead with your question.
I didn't have any additional questions at this time.
Okay, cool. Yeah, and Thomas, just so on that question, I can go in a little bit deeper with you. Okay, so we're always going to be monitoring the Fed. Okay, and we're always going to be monitoring the central banks around the world as well. Okay, because they control the bond market, the stock market, and the spot price of gold. Okay, so we're always going to be monitoring that, Thomas. Plus, we're monitoring the news flow, right? But we're going to be watching the market 18 hours a day, 5 days a week, so you don't have to. And anytime, Thomas, if we make a change or an adjustment to the portfolio, we're going to send you a text message and an email that's going to cover that trade. Okay. And it's really cool, guys, because for the portfolios, you know that your trades are going to go out at noon Eastern Standard Time, like clockwork. Okay. So the buy and hold portfolio will trade every Monday. Okay. The pro portfolios will trade Monday, Wednesdays, and Fridays. Okay. So it's really cool. And you know you're going to have a set trade time, guys, which is going to make the user interface on your side incredibly helpful. Okay. Because you guys are going to know it's a set time. Okay. Okay, cool. Yeah, Virgil. So you can do the same thing with your phone, bud. And I don't have a way to show the phone example on my computer, but I would absolutely do it if I did. But the buttons are going to be on there too. And if you need help placing that trade, Virgil, you could just write down, what you need to do between buying the stock and the put options, right? Just write that down on a piece of paper, call TD Ameritrades, just say, hey, I've never used the mobile trading platform to enter the trades. Can you walk me through doing that on my phone to get these in? And they'll be happy to walk you through that, Virgil. Okay. But yeah, kind of off the top of my head, Virgil, as long as you just type in the ETF. Okay, so say you just type in the ETF, you hit the trade button, and then all you have to do is just change your number of trades. And then also with the options, just type in XLF, okay, and then hit options, and then that's how you're going to select your option, and then you can go buy it directly from there as well. Okay, so that's the best I can do with that screen example, unfortunately for you. But awesome, Thomas. And so Thomas, let me ask you, bud, just while we have you here live, how much capital were you looking to put into the markets? What does that look like for you?
At least 100,000.
Okay, nice, Thomas. Okay, and are you just kind of sitting in cash right now?
I'm 2/3 invested and 1/3 in cash.
Okay, nice, Thomas. And what are you invested in with the 2/3? Like what asset classes specifically?
Tesla.
Okay.
Teladoc.
Okay.
Amazon. Those are my big positions.
Okay. Okay. Tesla, Teladoc, and Amazon. Nice. I really like Amazon. Definitely. Very nice. Massive market share, and boy, are they taking it faster than ever with all the COVID stuff going on. Love Tesla cars.
I bought Tesla early this year, but I'm concerned that it's run up so much that has to come down some.
Yeah, and honestly, Thomas, you're so much safer taking taking that capital, thinking about putting it into the best 500 companies on the planet. It's kind of still wishy-washy if Tesla's actually making a profit or not. love the cars. Don't get me wrong. Awesome cars. Love Elon Musk. But is it something I want to stay long today? Absolutely not. But great job on the run up too, Thomas. Excellent job there. Okay. Very cool. Yeah, and Teladoc, what a beautiful way to just to crank that stock. Recent IPO, and just exploded through the COVID stuff here this year. Cool. Yeah, and Thomas, those are the type of positions. If we put something on with the individual company, we'd actually use options to captivate a little bit more profit typically. Okay.
Okay.
And so, yeah, something you can make hundreds of
I would have to learn
percents.
how to do that.
Okay, cool. Yeah, and that's something that we do teach in our boot camp too, Thomas. And an
Okay.
awesome tool to have in your tool belt as an investor. And Thomas, are you retired or are you working at this point?
I'm retired, but managing my investments.
Oh, cool, awesome. Would you retire from doing, Tom?
Project manager and business analyst, mostly
Cool.
for software projects.
Oh, cool. Very nice. You know, we have quite a few software people working here with us. We actually have one of the VPs for Cisco that's one of our clients.
Okay.
Yeah, and I think he's trading a little over 7 figures behind our pro portfolio. And then we have quite a few people from IT too. We have another guy that used to run Mary Kay's Asian division. He was their director of IT for all of Asia. He's one of our clients. Actually, so that's actually Mark, and he is right here on the testimonials page. So this is Mark. He's the gentleman that's actually he was the director of IT previously for Mary Kay in Asia. So kind of cool.
Okay.
Awesome, Thomas. And any questions for you, bud?
Well, if we're only trading on Mondays at noon, when are you telling us what type of changes to make to our positions? Is that Monday morning or
So Mondays at noon.
late in the day on the prior Friday?
Mondays at noon Eastern Standard, like clockwork. Yep, that's when we're going to send
Okay.
out the positions. Yep, if we've made any changes to the portfolio, we're going to send those out on Monday. Okay, and really for the people that have less than 50K, they're typically doing the buy and hold, and the people that have kind of well over 100K are typically following the pro, because there is an added layer of security that is built in there as well. Okay. Oh,
All right.
nice, Ryan, and thank you for typing that into the chat box as well. Awesome, Thomas. Very cool. And yeah, Thomas. So kind of for the end of the year, what we're looking for, guys, and really this is good to know too. But we're looking for the lagging sectors. Okay, and I'm going to kind of show you guys here, right? It's all market mechanics when it comes down to it. We're looking for the energy sector to produce the alpha into the end of the year. Okay, here's a look at the XLE, which is basically all of the top profitable energy companies bundled all into one ETF. Okay, you can see that this still has not got back, really to where it was even coming into the start of the year, which is up in the 60s, right? Still trading 36. So we're looking for that to pull up and rotate the entire S&P 500 into new all-time highs. Really, and it's going to be the laggards that drive that. It's not going to continue to be tech, right? Because you got to have those laggards lift up to really push through. So that's a look at the energy companies. Now let's take a look at the financial sector. Okay, once again, still not back to where we started the year. Okay, XLF was kind of in the in the $30 range, still down here at 24. So significant move upward, right? But if we take a look at the S&P 500, okay, you can see we are already at new all-time highs. Okay, and it's because tech dominates the S&P 500. It's about 27% of it currently. Now let's take a look at XLK, which is tech. Tech is, I mean, look at that, guys. We literally just looked at financials, energy, the entire S&P 500, and just tech. Woo, tech has been the massive outperformer, but when I see situations like this, I'm not going to be the momentum guy that goes and jumps on tech at new all-time highs. Okay. I want to have a mix of the energy companies that are still not even close to new all-time highs, and in fact are even, close to half of what they were at just last year. Okay, and then same thing with finance, guys. This is where the money is into the end of the year, not in tech. Right. And yes, I know tech came off the bottom hardest and fastest yet. That's always typical, right? But the lagging sectors, right? So finance and energy is where the money is to be made into the end of the year. Okay. Um, let's see here. Yeah, Virtual, you're good to go ahead and buy that now, bud. Yeah, I wouldn't wait till tomorrow. I'd get that money to work. The faster you get it to work, the faster you stave off inflation. Okay. And yeah, you guys, I was just talking to a gentleman this morning. What he did is he actually paper traded with us for 4 weeks, and he's now in the process of paper trading with us. He got really comfortable with that. He saw that with 100,000 he would have made 8,000 in about 4 weeks, and he said, okay, well, I have about $400,000 getting eaten away by inflation, right? So it's, I mean, literally, inflation's costing him $30,000 a year in his capital. And he said, yeah, Dean, I just keep thinking about it. And he's like, I did the math on it yesterday. He said, I'm losing a couple $100 every day to inflation when I could be growing it with you guys. And I said, well, that's, once you're comfortable, David, transition that capital. He said, okay, by the time we got off the phone call, he said, okay, I'm moving in 200,000 to start. And so that's where he's starting with us now. But he actually paper traded with us for 4 weeks as a customer because he'd never traded. And now, he's putting real capital to work now that he's super comfortable. So kind of cool, and just figured that was a good mention. So yeah, Thomas, let's just say, you have a couple 100,000 in cash. This is an easy way to put it to work directly, okay, attached to the Fed. Okay, and literally will probably outperform the tech performance too. Into the end of the year will greatly outperform. And also the S&P 500 because we have that leverage factor built in. But subsequently, we are absolutely using risk management. We're absolutely going to have that AAA level of insurance for that project, right? We're not going to buy the Geico insurance. We're gonna literally get the best insurance possible for our assets. Okay. It'd be like creating a data center, Thomas, without insanely good insurance policies, right?
Okay.
Okay, cool. And awesome, Thomas. Any questions other than that as well?
No, I don't think so.
Okay, cool. Very cool. And let me see. Let me look through the chat here. Okay. Oh yeah, Virgil. So you may need to also download the Thinkorswim trading app too, if you are on desktop too. And if you have a mic, Virgil, you can go ahead and unmute. And I encourage any of you all to go ahead and unmute your microphones. Okay. That way you guys can ask questions here live with me. Okay, cool. So very good. Any other questions out there, folks? Okay. And let's see here. And a couple things we want to touch on too, guys. Oops. So that does not have the new. Let me see if we have our new page up yet here. Okay. Okay, guys. Now, real quick. So this is going to be something that's going to change this week. So if you have less than 50K, guys, okay, you're absolutely going to want to set up with the buy and hold portfolio now. Okay, and you're going to get 30 days access to our $10,000 program for free when you do sign up. Okay, but as you can see on our website here, okay, we have this warning: our buy and hold advisory price is going to actually more than double, guys, this week. Okay, so I'm going to post this into the chat box for all of you guys. Okay, So if you guys have less than 50,000 bucks and you're looking to get started with us, make sure to grab that buy and hold package. Okay, because that price is going to go up from the 997 today up to 1,997 bucks on August 27th. So let's see here. You guys have um, 2 days to take advantage of that to lock in that price. Okay, and I tell you too, guys, when you take advantage of it today, you will learn about two really cool opportunities. Okay, um, Ryan, do you have that? Do you have a link handy for all the bootcamp modules by chance that we can take a look at? Um, just wanted to show you guys too the access, the level of access you guys are going to get to us. Okay, as far as the content that you're going to get in the boot camp as well. Okay, and then a couple things too, guys. I did post into the into the chat box there. Okay, just there's a link in there, guys, to go ahead and get signed up. Okay, if you have less than 50K, make sure to get set up now, guys, before that price increase hits. And just remember too, guys, when you do that upgrade today, you will get access to our boot camp. And thank you so much, Ryan, for sending that over. Okay, so you will be able to study all of this content, which is phenomenal. Okay, and you'll get access to this, okay, after you get signed up. Okay, so this is really cool. I love this module number one. Okay, really getting into the big picture of things. Okay, this is going to show you how the Fed has controlled the market, okay, over the last 92 years. And it's literally going to teach you how much control that the Fed has. Okay, and so this isn't access that you guys are going to have otherwise. Okay, you have to sign up to get this access, and then you're going to learn how to short the Chinese yuan for a potential 12,000% return. We're going to walk you through every part of that trade. It's not easy to set up. It's not easy to get their approvals. Okay. And then also, we have some videos on placing option trades. Okay. And this video is awesome too, on call options inside and out. Okay. Upside down, forwards and backwards, literally everything you guys need to know about call options. Okay. And as we go through, we're going to add more options to this or more modules to this. Okay, we're going to go through call options, put options, covered calls, covered puts, selling puts, selling calls. Okay, literally you're going to walk you through every single option strategy there is. But for now, you guys can, when you sign up today, okay, you will get access to this. Okay, definitely watch this module number 5 video on call options. It's so incredibly powerful, guys. Timing on options is something I think that so many people don't get when they first start, and when they first get started, and it's the most important aspect. Okay, then you can see how to place all the option trade alerts. That's in there as well. So Virgil, take a look at that too, bud. That's also going to be on the Thinkorswim mobile platform. All right. Really, guys, how to short the Hong Kong dollar, how to get that all set up, and the big picture is absolutely awesome. So you're going to get access to all this content, okay, and much more, okay, when you sign up today. And really just getting through all these modules will probably take you a little over 10 hours, and then there's probably another 30 hours plus worth of content that's archived and recorded for you to go through as well. So that's going to be all things that you guys gain access to today. All right. So very cool. And any questions, guys, as we go through that? Okay. And real quick, guys. So if you didn't have my number, make sure to save it. Okay. And I'm going to show you my number one more time, but it's at the top of the screen. 505-322-7515. And just shoot me a text, guys, and say, hey, Dean, this is Thomas. I'm in the webinar. Hey, Dean, this is Adrian, and I'm in the webinar. If you even want to say, allocating 20K to buy and hold, just any little details you guys can provide. Love to hear that from you guys. It's going to allow me to have a better understanding of where you are. Okay. And my number is 505-322-7515. Unlike every other product you're going to see out there, I am literally one of the partners of the business giving you my cell phone number here live in the webinar. I want you to contact me. I want that process to be open and as easy as to communicate with me as possible. Okay, once again, it's 505-322-7515. Okay, so welcome and thank you for taking the time to join the investment webinar. Enjoy the education, and please, guys, ask any questions you have along the way. Okay, and really, folks, the whole reason why we do this, okay, is to help educate you. So enjoy the education, and please ask any and all questions you have as we go here. Okay, we truly appreciate your time and attention to show you how boring successful trading can be when you actually have the right strategy. And guys, we show you how boring trading is by simply attaching your capital to the Fed, because they control the bond market, the stock market, and the spot price of gold. All we do is simply follow that as well. Okay, so now, team, please meet myself and Jason, your Chief Investment Officer. Okay, guys, so my name's Dean Gallagher. This is me on the left here. Okay, I'm a partner and investment consultant here with Portfolio Builder. Been in the market for 17 years, have a substantial amount of capital invested across various assets, but really my core investments assets are in the US equity market. Okay. I love to talk about that. Love to learn where other investors are to see how we can help you. Okay. And this is, and so trial members, seriously, just text me and just say, hey, this is Luis. I'm in the webinar, and hey, I had a question about this, or hey, Dean, I wanted to allocate 25K. Can we hop on a phone call real quick? Just text me that, guys. Love and look forward to getting those texts. Okay. It's super fun. I love this stuff. Okay. I've spent literally, and really before I ever even invested, I've spent 20 years now studying every single thing I possibly can about investments. Okay, so use my brain, guys. That's the industry I've been involved in, right, for 17 years. It's really fun. I love it. I love helping people understand why the markets work the way they do, and love showing them how to make money by understanding what's going on. Okay. So literally, guys, that's me on your left. Now, Jason is our founder and chief investment officer. Okay. He's going to be your dedicated resource for any and all questions after you're a client of ours. Okay. And literally, guys, in the live webinar interactions, after you sign up, you're literally going to be able to talk to Jason every single week. Okay. And, if you do the pro strategy, you're going to be able to talk to him literally every single day outside of Tuesdays. And then if you do the lifetime strategy, okay, you're actually going to be able to talk to him literally 5 days a week. Okay, as long as we don't have a market holiday. If we have a market holiday, we won't be open for the webinar, right? Because we're going to enjoy our time off as well. But literally, you can have access to our chief investment officer 10 hours a week, guys. That's not something you're going to find with your financial advisor with Morgan Stanley, right? You'll never talk to their chief investment officer. Okay, they won't even give you the time. They won't even sit you in the same room unless you have 100 million with them. Okay, Jason's going to be there every day, depending on the level of service you want to join with us. Okay. Now, the mission of Portfolio Builder is pretty simple. So Virgil, just email support@portfoliobuilder.io. Okay, and you can always ask Jason questions live in the webinars as well. Okay, so the only people that get Jason's cell phone number is our lifetime members, actually. And there's only 20 people of our 380 some clients that have his personal cell phone number. Okay. But yeah, Virgil, until you get up to the lifetime level, just email support@portfoliobuilder.io. Okay. Or you're going to have literally from now until the end of the week, you're going to have about 6 hours of live interaction time with them. Okay. So just jump into the webinar at noon tomorrow and ask any questions you have, or email support@portfoliobuilder.io right now too. Okay. So guys, so real quick, so we're going to engineer and build the safest growth for your hard-earned nest egg. Okay, number two, we're going to educate you on how the central bank controls the market and attach your capital to it. Okay, and that's what it's all about, guys. Understanding how much the Fed has control over this bond market, the stock market, and the spot price of gold. They control all of the three most liquid instant access markets on the planet. Follow them. Don't fight them. Follow them. Right? You can either be the gambler at the casino, trying to beat the casino, or you can go work for the casino and make great money every year. What are you going to do? Well, I'm going to attach myself to that casino. Okay. Number three, answer any and all questions you have about our portfolios in our live exclusive webinar interaction. Okay. It's so cool, guys, because we're going to give you the education that your advisor's never going to give you or the hedge fund's never going to give you. We're going to answer every single question you have during our live webinars. Okay. Unlike your investment advisor, the hedge fund, they just keep you behind a curtain your whole life. They don't teach you anything. They don't answer any questions for you. And really number one, guys, there's not a single investment advisor I have ever met on the planet that has a clue on how to make money in down markets. They're going to tell you to dollar cost average, keep buying. Well, I don't like that, guys. I like to make money in any market situation. Okay. So does Ray Dalio. That's exactly why we mimicked his strategy, because he was able to do it for over 20 years straight. Okay. Now, many of our members make the cost of our membership or more in a few weeks, and our trading plan takes less than 2 minutes to execute at noon Eastern on Monday, Wednesday, and Friday. My challenge to you is to see how much you can make over the trial. And I want to very openly ask you, is there a better way to build trust together? Okay, I don't know of one. If you guys do think of a better way to build some trust together besides me putting some money in your account, please let me know what that is. Okay, and I'll certainly look forward to wrapping that into our business model. Okay, so let's take a look here. Okay, and I want to show you guys a screenshot from our top client that made a $97,000, $97,019.89 profit during his free 7-day trial period. Okay, now it's important to know that this is the most profit that anyone's made during a trial period, but I'm going to, until someone beats him, right, I want to show that as part of the value that I'm offering you on your free trial. Okay, that's more than double the American average household income that was generated in a 7-day period, okay, with our help. So pretty cool. And just wanted to tap on that really quick. And as you'll notice, as I kind of zoom back out a little bit on the screen, right, this is just a screenshot from Thinkorswim's account page. So if we open this up, we look at our account page here, same exact page. Okay. And pretty cool. I'll never forget that day. This gentleman's name is Ron. He emailed me and he said, "Hey, Dean, profits look great." You know, I saw that on my cell phone, I opened up the email and I went, wow, that's a new record. So I just wanted to kind of tap on that for just a second, guys. So there is a massive value that's offered to you during your trial. Okay. And the whole reason why we do it, guys, is to help you make some money before you get started. Okay. And even if you just use paper trades just to get comfortable with what we're doing and why, so you can see how much you would have made if you used real money, you can always do that as well. Okay. And it's just such a fun way to build some trust together, guys. So that's why we offer the freemium, the freemium model, and you will have one free trial. No, we will not give you another one. Okay. Rule number one, never lose money. Rule number two, don't forget rule number one. Our top rules that's at the core of our investment philosophy. Okay, guys, and the whole reason for the webinar today is to help you quickly establish a defensive balance for your portfolio. Plus, you'll be ready to profit from a very risky time period with our trade engineering. Okay, trade alerts will be delivered at noon Eastern. Okay, on Monday, Wednesday, and Friday. We engineer our positioning in coordination with the financial system, i.e. the Fed, and macro environment. All you have to do is take 1 to 2 minutes to replicate the trade in your account. It's so simple. Okay, guys, and from Jason, you're actually gonna have a live trade alert presentation every Monday, Wednesday, and Friday. We're gonna go much deeper into the markets. The whole point of the Tuesday presentation is just to help you guys get allocated and help you understand exactly what we're doing. Kind of take things at the elementary school level, if you will, to really help you understand really the basics of what we're doing, why we're doing it, and why our customers make so much money with us. Okay. You can always review our track record by going to portfoliobuilder.io/track fast record. We build trust with our clients by being 100% transparent with every position we've ever had. You can always access our track record by going there. And literally, guys, unlike every other person that's in this industry, we do publish every single trade we've ever had. Okay, so go take a look, see everything we've ever done. Okay, now guys, you're going to need a few things in place to get the most value out of your trial and be able to make money during your trial. Okay, number one, you need a brokerage account set up to follow our trading plan. Okay, if you're going to do pro, you must have options trading enabled. If you're going to do buy and hold, you don't need it. Okay, but you can use real capital or simply paper trade. Then you can see how incredibly easy it is to give your hard-earned money the protection it deserves. Okay, next you're going to need the ability to take 1 to 2 minutes to follow our trade alerts released at noon Eastern. These alerts are by no means time sensitive at all. They simply need to be placed before the market closes at 4 Eastern. Now that's for the pro. With the buy and hold, guys, you actually do have a 24-hour trade replication window. Okay. Number three, you're going to need a mobile phone to receive our text message trade alerts, guys. I love the ability to get our text messages, our trade alerts via text, right? Email tends to get buried for me. Text absolutely do not. So it's so nice to be able to click on that text, see exactly what you need to do, and either go back to your day or go back to your vacation, go back to your full-time job, go back to your passion projects that you're taking care of during retirement. Okay, and just know your money's safe. All right. And last but not least, an email provided that's in good working order because we send out the emails on top of the text messages. Now, guys, you can see how we smooth out the wave and avoid big drops with our positions. This is the beauty of risk parity. Okay. In December of 2018, the SPY fell up to 16.63%. However, we made a 1.1% profit. It wasn't huge, but hey, you know what? It was better than having the almost 17% drawdown that everyone else had. Okay. And I remember tech actually got crushed about 36% that same December. So it was really nice to watch this grow. And that, guys, actually going through this with, I had a smaller amount of money allocated at the time. Okay. Watch that go through, saw that a profit is actually generated at the same time. That's when I actually bumped up the allocation and was just blown away by the risk parity strategy. Okay. And then February and March hit, right? And the SPY fell 34%. And our pro portfolio plus two trades that came out of the boot camp actually made 9.2% return. So think about that, guys. And we'll use $1,000,000 as an easy reference. Okay. Or let's just use 100,000 as an easy reference. Okay. Let's say you had 100,000 net long in the S&P 500. Well, you had a drawdown of about $34,000 over a span of 2 months. Subsequently, using a risk parity strategy, we made 9.2% return. Okay, so we increased your account by $9,200, or you had it draw down by 34,000. What would you rather do? Well, I like to make money in any market scenario, so I will certainly take the latter. Okay. So very cool, guys. So how can we help you and your family? Well, we have two portfolios you can build with us today, depending on your investment capital. We also have our educational bootcamp that will dive deeper into the education and deliver our high alpha trade alerts. Okay, guys. So is there any questions at all at this point as far as what we do, why we do it, why our investors are always taking the safest manner? Quick overview of our content schedule. Okay. And if you haven't saved it yet or text me yet, guys, 505-322-7515. And for everyone out there that, if you know we can help your friends or family members, okay, if you refer them over to us, guys, just tell them to call me too. Okay. We will send them an Amazon gift card anywhere from 100 to $500 when they sign up. Just make sure they mention your name. So Virgil, as you build profits as a customer with us, right, and you want to bring in your family and your friends, okay, make sure to have them call me. We'll get them set up, okay, and we'll send you that referral, for getting that client set up, okay, and it'll be an instant Amazon gift card, guys. That's just a cool way to say thank you, I'm looking to boost my referral business. We had an incredible amount of referral business so far this year, but want to keep that elevated and supported. So I'm giving you guys a nice little extra thank you. So once again, guys, if you have any questions, 505-322-7515. Just give me a call, shoot me a text. Look forward to talking with you folks, and look forward to showing you guys how to make safe, consistent returns with your capital And eventually, guys, we'll get you up on this board as well, bragging about profits, bragging about safety, bragging about not caring about having their money, large sums of money to work with us. And I can very honestly tell you, Scotty has over 400,000 with us. Murray's is really close to 2 million now. Oscar is close to 2 million. Carrion's over 350. Okay. Donald has close to 2 million with us. Mark has I want to say about 650, 750 kind of with us now. Um, but hey guys, some people will start with 25,000 with buy and hold. Some people will start with a quarter million with pro. It really is just going to depend on your own individual ecosystem as to where to start. And if you want any help with that, just give me a call, folks. 505 322 7515. And thank you so much for your time and attention, folks. Look forward to speaking with you over the phone. Have a wonderful day.